This is, I think, one of the most important conversations we can have today. We don't have enough time to go through it all. I know we're still Shantel. Um, yeah, so we don't have enough time to go through it all. But we want to start this conversation because I don't hear this conversation had, at least publicly, really at all. Yeah. And so this is about a few things: helping diverse founders either sell, merge, and/or find their next role in tech. Right? Either find their next role in tech if their company doesn't work out. So we got some bangers on the stage. They're gonna drop some gems. We're gonna start to talk about founder mindset, founder therapy, the mechanics of M&A and stuff like that. And again, this could be like a 3, 4, 5 hour conversation. We're just gonna get a little bit into it. And again, what I'm looking for here near the end is questions or comments from you all in the audience. So before we kind of get into this, let's go around the horn and do some quick intros: name, company, where you're based out of, and quick description of the organization. Chris?
Good afternoon. My name is Chris Gilmore. I'm a partner with Townsend and Lockett, chair of our private equity and venture capital practice here in Atlanta.
And I am Barry Givens, managing partner at Collab Capital. We're a $50 million venture capital fund in Atlanta. We invest in innovative companies led by Black founders.
Hi, everyone. I'm Jasa Gooden. I'm Vice President of Startup Banking at Silicon Valley Bank, leading the greater Atlanta area as well as the Mid-Atlantic region. Based here in Atlanta, from Atlanta. Always like to shout that out. And thank you all for joining us.
Hey everyone, my name is Sherelle Dorsey. I am the founder of The Plug. We got acquired back in the spring by Impact Alpha. So, yes, thank you. That's why we're friends. One of the first Black tech news publications to syndicate on the Bloomberg terminal. Since I have sold the company, I'm building out something new and exciting that I may or may not talk about. We'll see.
There it is.
And I'm Shantel Cohen, and I am the founder and CEO of CWC Coaching and Therapy. And we do therapy with the business coaching lens for entrepreneurs and busy professionals.
There it is. There it is.
That sounds like Wendy Rhodes from Billions.
It is exactly like that.
Yes, I can personally attest. Sherelle, I want to start with you. And also, Barry, you didn't mention some of your background. Maybe able to get into yours a little bit, too. Sherelle, tell us a little bit more about The Plug and how you came to the decision about what to do with the company.
Yeah, so The Plug actually was an accidental business for me. I've been working for companies like Uber as well as Google Fiber and was covering the Black tech space because there just wasn't enough in-depth coverage in media and things that I really wanted to talk about, and being in environments in the Southeast where there were really dope folks like the people here in this room that I was coming across, but I did not see that particular kind of news. So I started this newsletter, this like daily tech newsletter focused on Black and brown folks, and it like kind of quickly grew and quickly became something that corporate companies wanted to partner with me on. 7 years in, 5 employees, working with 40 plus incredible Black business journalists, lots of incredible partnerships, syndicated on the Bloomberg terminal, all those things. 7 years deep, I just kind of hit a wall personally, where I felt like I brought my team to where I could get them to. In terms of the kind of work that we were doing and covering, the kind of reports that we were releasing. We were very data-driven, so we did a lot of analysis on Black innovation data, which typically is not something that gets the proper funding or analysis to help us understand what's happening within our innovation ecosystems. But I also realized like it went as far as I wanted to take it. I accomplished pretty much all the things that I wanted to accomplish, and selling it to a media company that we'd done work and collaborative work with. They're more of an impact investing firm, or excuse me, a media publication. It kind of made sense. And I got to a point where I was like, I've done this. I'm ready for the next challenge. I'm ready for the next thing. And also going hard for like 7 straight years, I was like, I'm tired. Like, I'm just exhausted. And, for how many entrepreneurs are like in the room? I know there's kind of a mix, right? Like after a while, you're like, these being on planes, right? raising money, trying to like make sure you can make payroll every other week, like all those things after a while. And I'm so glad that you're here to represent the mental health side. When the highs are highs, they're high, right? When the lows are lows, they're low. And I looked up at the end of 22, where we started to see the economic landscape change very drastically, right? The kind of money that we were able to have access to in partnerships changed drastically. So I had to ask myself at the end of the year, do I want to grind harder for about half as much as we were able to procure before, and maybe hit our mark a couple mil, or do I want to say, look, we have hit the plateau, we did great work, we created impact, and now we can pass it on to someone else to kind of take it and integrate the principles that we developed. I didn't want to get to a place where we fully ran out of money and had to die, right? And that conversation with my team was rough, because I have an amazing team. Actually brought 2 people over to my next venture, and the others went on to the Atlanta Journal-Constitution, Techstars, amazing. And I felt like I don't want to hinder my people, because growth is going to be really, really hard in 2023 based on the business that I'm in, and based on the fact that, Black folks were really popular in 2020 and in 2021, and now we're back to our regular racism. So I had to be realistic about what we could do, right? So that's really the genuine reason why I realized, look, we accomplished what we need to accomplish. I personally would like to rest and recover and restore and be in my soft life era. And I also do not want to prevent my team from growing and becoming who they need to become.
Nice. So one, I needed y'all to hear that. I needed y'all to know Sherelle. A lot of people know Sherelle, but I need the rest of y'all to know who she is and why she's been so important to this movement to support diverse founders, particularly Black founders, for the last few years. So and you touched on amazing things I'm going to go to tell in a second, but Bear, you had a startup yourself. Can you quickly share what that was, and then how you came to the decision, how you all came to the decision around what to do with that?
Yeah, and I'll be quick, because Sherelle kind of hit all of the key points in her decision. But before Collab and before being managing director at Techstars, I ran a startup called Missi, where we invented an automated bartending technology like the Coke Freestyle machine, except it makes alcoholic beverages. And the highs were high. We fundraised a couple $1 million. We launched that TechCrunch Disrupt. I was in the center of Entrepreneur Magazine. I was on CNBC. It was just like this Atlanta darling story. Everything was great. And then as we started to scale the business, hiring people, building the team, doing everything that investors tell you to do, that you need to do in order to raise capital. And then we went out to raise said capital, which I guess would be a Series A today. Terminology changes like every couple of years. So, but we went out to raise a Series A, and we needed $8 million. And we were just running into roadblocks. And we were very good business people. We knew what we needed. We knew exactly the plan, what we needed to do to get there. And like most founders, we're delusional. And we raised 2 and said, fuck it, we're going to get there with 2. Even though we knew we needed 8, right? But at some point, the delusion, as a founder, you have to recognize when it is delusion, right? You have to trust that your business acumen, the plan you put together, that you were smart enough to put together that plan, and that plan is the right plan. And when we got to about $500K in the bank, to Sherelle's point, you got to look at yourself and look at your team and look at the struggle that you're going through. And we had to make a very hard decision. And so I said, when we got to about 500, it was like, yeah, guys, I don't think we're going to make it with the 2. We really needed the 8. We were right. And just had to fire everybody. Just had to call people in the room and say, hey, I love you, love what you're doing. I really wish we could stay on this journey, but we're going to have to find a way to land this ship or to land this plane. And it all comes from, like I said, the reality of where you are. I was talking to a founder earlier, and in this environment, I know that's why we're having this discussion, you have to understand the realities in front of you. People not giving black people, I think all the people in DEI have been fired at this point. I don't even think there are like DEI departments in corporations anymore. And so you have to understand the landscape of your business, understand whether or not investors are writing checks today, and then map that with the plan you have in your business and see if they line up. And in my case, they didn't line up, and so we had to make the hard decision to sell the company, and we used that last $500K to position ourselves to be a company that was acquirable, and make sure that all our IP was set up properly and that we could go out and do what we needed to do. But we also needed capital to do that. So the last point, to Sherelle's point, waiting until you get to zero to make that decision is terrible. Like, you have to make that decision when it feels like you still have gas in the tank, when it feels like there's still opportunity in front of you. So you're typically having to make this decision at a time where your founder brand is telling you to keep going, but it still may be the right time to actually pump the brakes and make a different decision.
Can I just say really quick to that point, it's also about the dignity of the people that came alongside and trusted you and said that they were going to come and build with you. And how many of y'all in this room like have employees like W-2 and y'all paying health insurance? Okay. It is so like, even during my burnout, because I probably was burnt out for like 2 years, and we've had this conversation too, Joey. Even in my burnout, what will wake me up every day or get me out of my bed is that I knew that I had employees who had mouths to feed at home. And I knew that they were depending on me for that health insurance, for that, life insurance policy, dental insurance, what have you, in that paycheck so they could pay their mortgages. And a lot of times you'll hear that, companies will shut down after they've had all the hype, they've raised all the cash, right? And you see these like threads on Twitter, some CEO like, today we had to fire, blah, 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 blah. I wanted to remember that the people that helped me build and be in the trenches, I had to go into those conversations with the mentality of, I owe you. I owe you for coming along with me on this stream. So I didn't like have a conversation on a Monday and say, okay, everybody's gone, we're shutting this joint down on Friday. I gave my team like 2 months to prepare. And some people who I needed to keep on to help do the transition a little bit longer, as well as severance packages. And so I had to be very realistic about what was left in the bank account. But as much as I could, I tried to give people enough forewarning, which could be a little tricky because people could get really upset and start shutting things down. But I had enough faith and trust in my team, and I had enough faith and trust in myself that I was coming to them correctly and saying, look, this is not what I want to do, but this is what we have to do.
Let's go to,
It's really interesting what you're saying, Sherelle. I think the hard part here about if you have to close your doors are the one word we never use. We talk about how we're the rock stars. Everybody, who's a founder feels like they can climb Everest. And yet climbing Everest is fraught with danger, and you're doing it without oxygen. And nobody talks about how vulnerable it is to be a founder. And when you have to shut down, there are these feelings of shame and guilt. And the shame is so loud in one's head that it has people hiding and not dealing with the reality. And so a lot of these founders that I talk to, let me just go back a little bit. There was someone I was talking to last week, and she said, I guess I couldn't cut it. And so that voice in her head is so strong, and she's got all of these negative messages that are playing in her head. And there's also the guilt, because oftentimes friends and family have invested. They may have a spouse, children to feed, and then they've got their team. And so sometimes people are kind of clinging to that delusion at times, not because they want to hurt other people. In fact, it's just the opposite. They're really trying to save their team, themselves, but above all, they're trying to save themselves from what they feel is shame and indignity.
That's deep. That's deep. I mean, we heard it earlier, right? And so in many cases, if you run a tech company, if you don't get to $1 billion valuation, the general culture says you're a failure, right? But we know that in many communities of color, that failure isn't rewarded. In the tech culture, the general tech culture, it's okay. Lesson learned, keep on, you do something else. But in many communities of color, at least what I see, is that you don't have that right. You don't have a right to fail. Like there's somebody else here in Atlanta that says you don't, like tech founders if of color, if you fail, you don't show up to the family reunion again in life. You withdraw. Like that's the tendency to withdraw if you're a person of color
Right.
and you fail.
Right? Can I say one thing,
Yeah.
Joey? Like, how many in this room? How many people have failed? Like, how many? So we're talking about a deeply human experience, and yet we feel such incredible shame. And so I think we have to remember that this can be a very powerful place where we start to understand who we are, we take stock of what's happened, and then we start to grow from it. And that's a rock we can stand on. You know, I'm probably much older, could be everybody's mom in this room, and I'll tell you, in my day, we used to call that wisdom. And so there's something to be learned from this, and in every chapter, there's meaning. And so if we embrace each other and start talking about, yeah, I get it, I've been there, it may not be the same thing that you're going through, but I've been there, we can start to help our fellow entrepreneurs and not see people and I see people who go into the hospital who've attempted suicide because they cannot face the fact that they've done something that's very deeply human. And they've also failed and succeeded in that process, but they forget about the success.
That's deep. That's deep. So let's go into more of the mechanics behind it, right? So I want to go with Jasa and Chris here, right? And anybody else can jump in. You know, like Sherelle and Barry said, you have some money in the bank still, you're not at zero. You start to make this decision, right? I should try to sell. Merge. There's a whole conversation, I think, around merger. We see in many cases, and I know there's, Joe speaking the same, but in many cases, especially the last few years, we've seen a lot of founders of color start companies in similar industries. Like I was like, if I see one more like fintech company, like something very specific, like I see like 10 of these a day from a diverse founder, like y'all should, and I know there's other people on the stage and in the audience that say that feel the same way. Y'all should just come together and build the same company. I mean, there's ego involved in that, and maybe we can come back to that in a second. But let's talk around the mechanics of a deal. Jason, I mean, what are some of the things that you all see when you're helping founders to try to, kind of exit from a sale or something like that?
Yeah, so for me, I always tell founders, and you gave me this book, Start With Why, right? But beginning with the end in mind. So when you're going on this journey of starting this company, from an investor perspective, they're looking at you like, who would buy this? The same way you're looking at customer acquisition, customer development, who would buy this? That's how they're looking at you. And so you want to know what type of large corporations could be a potential fit for buying your company, because if you're going to be a VC-backed startup, that's essentially the end game that you have to be prepared for. And so when I was a junior VC, I was the first investment hire for a New Voices Fund. And so I was constantly on PitchBook looking at M&A activity, seeing who the major buyers were for the particular sectors, and for whatever company that I was looking at for a deal opportunity, I'm looking at their customer pipeline to see if any of those potential M&A buyers are customers, because in most cases, that customer is also the buyer. Or there's some type of relationship that's established with that customer, that relationship is developed over the years, and then when there's an acquisition opportunity, the relationship is already established. So for the type of deals that I've seen with M&A activity, that relationship is well developed. What tends to happen when that doesn't take place is that a founder looks up, they don't have an understanding of their burn rate, their cash flow, and they find themselves in a crunch. And then I'm hearing from them at the last second saying, hey, can SUV give me a loan? And that is not how we operate and how we give financing to companies. So there's so much prevention that can happen along the way if you speak up and ask for help. And so if there's anything I want founders to take away from this is that if you sense that it's getting hot, it's getting spicy, and you're not sure how to handle things, use the community around you. Don't let that shame and that guilt be what drives you into isolation of figuring things out yourself when you have people around you who can help you find the resources that you need.
Nice. Chris, so you do the deals, right? Go ahead.
Yeah, we do the deals. We do the nitty gritty. We do sell side and buy side. So we see when we are picking the company apart, and then we're taping it together to go make it look real nice for the buyer. So for founders, when we're representing founders, big things are, everyone wants to move fast, move smart, be efficient with your dollars. But at the same time, if your goal for your business is to sell it, right? If you have a family-run business, you're going to own it for 30 years, fine. But if you have a startup, usually you have an exit in mind, and you need to operate the business in that manner, and that includes all of your legal. That includes your structure, because when it's time to sell, those things can become issues. And let me jump over to the buy side. When I was an associate working in big law, the best thing that I could do on the due diligence team was find something wrong with that company and drop the valuation. That was my goal. You find it, you get on the email, you're like, let me tell you what I found, right? And I'm like, 2 million or 30 million, please, 22. Let's go back and drop it by $8 million. And so understand that it matters. And because then we're saying, well, I don't know if now we have a tax issue. I don't know if they have indemnification coverage on every contract that they have because they don't have appropriate provisions, right? And you have 100 contracts because you've been killing it. And now it's a problem. And so you want to make sure, take the time. It's very important that you have your documentation in place and understand what it looks like when someone is really doing due diligence on your company, on your structure, on your operations, how you're put together. And that includes, it's everything. Employees, insurance, contracts, taxes is number one. So I can talk forever about it, but those are some of the top line things that when we talk to a founder, we do an internal process first. We vet you like we're buying you, and then we try to paper all that up.
So again, we talk about information, right? The information gap, subset of the relationship gap. Because if you don't know this stuff, and again, you're looking to sell, you got a few months left, and then the lawyers are trying to wait you out, and then every month, every week that goes by, money keeps on getting lower and lower.
And Chris is not inexpensive.
Right.
And so if you wait to the last minute to then ask Chris to fix everything,
so let's talk
Chris
about
be
the
like,
money
hell
part.
no.
Let's talk about the money part. As a lawyer, I know you're not going to give me a very specific answer. I know that. I'm married to a lawyer. Let's talk about ranges. Any insight on ranges about what it might take for a founder to go through a process to sell? Cost.
Oh. Your best cost is going to be with us. But, I just talked with someone like this, about this. A founder who they have some money issues. They want to merge with another company. They think that one company does A, they do B, and the market wants A, B. They said it'll work. They have financial issues, though, and came to us like, what's the cheapest way to do this? And I said, it doesn't work like that. You want to put something together that then will go and kill the market and be a $100 million company. Don't you want to do it correctly? And don't you want to fully vet everything? I said, there's so many things that can go wrong on the back end that you want us to do the full process. Now, to your question, that, flows into cost. I will tell you, if you're looking to sell a company on the low end, the lowest end, you're looking at you're like $40,000 to $50,000. High end, $300,000. Like it can go, and that's based on the the hourly rate of the attorneys that you're using, the complexity with respect to your business, the regulation attached to your business, the entities. You have multiple entities, but if you're a single entity business, one office, you're doing a straightforward either a merger or just asset or a stock sale, and you don't have a lot of rollover with respect to your employees. You don't have a big option pool or anything like that you have to pay out. You don't have any international. I'm going through it. International things. Then you'll be in that 30 to 50 range is again on the low end of where you should be.
So, and I don't think a lot of people knew that, right? I think if you ask most founders how much it would take, they 5,000-10,000, and keep it. Yeah. So again, if you don't have the, so again, information, right? Information is power. Information. Anybody want to add on to it?
And I'll quickly add in as well. It is a process. It is a sale takes longer than a financing. Think about how long your financing took. They were just investing in your business, and then they owned 8%, 12%, 20% maybe. They're buying the whole thing. It's definitely going to take longer. We have people that come to us on Monday saying they're ready to sell on Friday. I'm like, it doesn't work like that. And, I'm like, you might be ready. We're not going to close. Or if we do, you just take all the risk. A quick sale, 45 days. 45 days, 45 to 60.
Yeah, I want to add to that with an example from my experience. So I sourced Mael for New Voices Fund when we made that investment for that team. And as you all probably know, they had a pretty exciting exit to Procter & Gamble. So if anyone who doesn't know, New Voices Fund was created from the sale of Sundial Brands, which is most notably known for Shea Moisture, and that transaction that they had with Unilever. So for them to be involved in Mael, there was so much synergy in their exit scenario with P&G. So I got to see how quickly they just were accelerated by having the right partner. And a lot of companies, they seek out investment bankers to drive their sale process. And like you said, that comes with a lot of vetting and whining and dining. And for a founder, that's a very exciting process. But you also have to pick the right partner, because in all those conversations, they're diving into the weeds of your company. They're also on a relationship level wanting to know you and how you're going to be involved with the company going forward. If that is the vision, there's an opportunity to take money off the table. So how much of that do you want to do, and what are the implications of that for you as a founder and the long-term wealth that you're looking to establish? So it's not always this doom and gloom situation. For founders, it can be very exciting because the generational wealth is created. You're creating millionaires for yourself as the founder, as well as your team and the people who were there with you from the beginning. The, more pessimistic side that Mael experienced is that a lot of people were saying, oh, they're selling out.
That's the whole point.
Exactly.
That's a whole other conversation. That's a conversation.
Exactly.
That's a conversation.
So I heard Diddy speak, I believe it was at InvestFest, where he was saying you're not selling out, you're selling up. And as a founder, because he was talking about Ciroc and Sean Paul and all the other ventures that he's been involved with, and he was saying that the best thing you can do as an entrepreneur is get out of a company at the right time. A lot of founders, what they thrive in is being able to be part of the creation of a company and the process of building from the ground up and the process of developing a new concept. They don't necessarily want to be at the head when you're a multi-billion-dollar company and the P&L this and the economies of scale that. That doesn't have the same excitement. So a lot of founders are okay with letting go of the reins, and then they go on and they start something new, and in a lot of cases, something better. So give yourself that grace to not feel the guilt and shame again, to explore those options for yourself without feeling like you're doing a disservice to your community, because what you're able to do with the outcome from that transaction can have even more impact than you were already making.
Yeah. Sister Cohen, I think we need to have a whole other conversation around the sell and the sell out. That's another day. That's like part 2, maybe. There's like 3 or 4 parts to this, and we'll get to it. Before we go on to helping founders find their next role piece, I want to dig into a little bit. Some of you, this is open. perhaps thoughts on how we can be intentional around helping founders of color, sell or merge, right? And so over the last 3 years, Sherelle, you alluded to this, all the support that's been driven into the ecosystem from companies and funds and stuff like that. Like, how can we take a fraction of that, again, given the economic times and DI headwinds, to help some of these companies have a soft landing, right? So for example, an idea may be, if it costs a company $50,000, perhaps maybe there are some grants out there, some cash awards that can help defray some of the legal costs. Or maybe there are some law firms that are able to offer some pro bono hours or something. Not talents to lock it because they got to get paid. But maybe some big firms or something that can do some pro bono hours to help defray some of those costs. Things of that nature. Anybody have any thoughts there?
I can definitely jump in there. One, whether it's, and I would say this on the money applies to any major legal undertaking. I always tell my clients and just friends or just people out here, I say, roll your cost into the deal. Don't spend money, one, just hoping that something will happen. Usually that's in connection with the financing. But if you have a sale, say, all right, cool, negotiate your sale cost. And then throw the attorney fees on the top. Say, look, you're going to buy my business for $5 million, pay my attorney's fees of $100,000.
That's pennies.
Whatever it might be.
Yeah.
It's pennies. They'll do it. And usually what they'll do, we hate it because we get it. We'll get the document. It's got a cap in there. It'll say you can't go over this much, whatever, but it's built in. Roll it in. And it's all a business cost. And it's not just attorney's fees. If you have to have CPAs, anyone else that's involved in your sale or that transaction, roll those fees in. So that's part one. What I would say part two is, with respect to clients that are selling, you spoke about it right when you started. You said we always have this thought of people selling their business for $1 billion. And if you don't, then you're a failure. And we hear that as well as our clients are building and building and building. And I tell them, I say, this is my little spiel I give them. I say, what's the largest check you ever got? 10,000, 20,000, 30,000. Maybe you sold a nice house, a lot of equity, 150,000. You've never gotten a check one time of 200,000, 400,000, $1 million. You're talking to me about $1 billion. You have not gotten a check of much lower. It will change your life. It will change your life. And so what you're doing, for one, is amazing, is astounding. And the check that is in front of you is life-changing. And the process that you're going in, it is an iterative process. We're in phase one. When you sell at phase one, when you come back into the entrepreneur space, you have more capital, you have more knowledge. And now, instead of you building a business that you will sell for $3 million, you're going to build a business that you will sell for 30. And when you sell the 30, you can come back for phase three, and you can sell that one for your $1 billion.
There it is.
But it's a process.
And I think everything wrapped in what Chris just talked, it's all wrapped in education, right? And it's like, if founders don't understand, so like whether it's educating them on the market and where the market's going, where the market is, why it's a good time to make a certain decision, we have to have these conversations, particularly sitting where we sit as investors. I've probably had this conversation, or between the partners, probably 5 or 6 times within our portfolio over the last 6 months, because this market is different. It's not a lot of money out there for you to go get, so you have to make realistic decisions. But one thing I'll say for the investors and the mentors and advisors in the room, one of the things that I try to do personally is I try to help them get to the decision on their own. Because I think as an investor, sometimes it can feel self-serving to go to the founder, because that's our job, is to liquidate. Our job is to write you a check and then liquidate for a lot more. And so it is self-serving to go to the founder and say, hey, it's time to sell, and just speak at the founder, versus going down and sitting down with the founder and saying, okay, walk me through your next 12 months. Okay, let's walk through what the cash looks like. Let's walk through what your pipeline looks like. Okay, you tell me you're going to do $10 million in February. You did $5,000 in November. Like, how is that going to happen? Walk me through And they get to a point when they sit down and talk through with another person where it's like, all right, I see what you got going there, right?
Yeah.
And let them get to that conclusion on their own. Because I think the next level of making the decision to sell, and even more importantly in this on this point for a merger, is ego.
Yeah.
And if the person is being told to do something, their ego is never going to push them in that direction or allow them to do it well. And so if you can kind of get them to that point on their, or let them get to that point on their own while you're kind of helping them navigate, it makes that next conversation so much easier because now they know where they are, they know what they're bringing to the table, and now they can go into that conversation and say, okay, you want me to talk to who about a merger? Okay, I'll take that call, right? Or you want me to raise money to go sell my business? Okay, I can understand why you want me to do that instead of chasing this dream that I have. And so I think those are just a couple of things that as a community, but more importantly, for the leaders, advisors, mentors, investors in said community, before you ever make it, because you got to do all this before you talk to Chris. Chris is a very expensive friend. So you want to have these conversations done before. You don't want to have a conversation with Chris until you are ready to go. So as leaders in the room, we have to make sure we're having these conversations with founders so that by the time they get to Chris, it's a very efficient use of their last little bit of capital in many cases.
There it is. Shantel, I don't know if you wanted to add in. You may have been grabbed the mic.
I know that we were out of time, basically, but what I'd say is that I don't want people to ignore their mental health. This is a head game. I mean, we've all seen the celebrity who becomes super famous overnight, and the next thing you know, they're canceling tours because of exhaustion. It's really about their mental health. And so when you go from a transition of being an owner, founder, to someone who's either sold their business or shutting your doors, it is a mental game. And the lens in which you view that will dictate oftentimes how you get your next gig, if you're resilient enough to go on to do it, and if you view this as another iteration of the journey or as a failure.
Yeah.
Can I add something? Because we didn't touch too much on the finding your next tech role.
That was next. We got a few extra minutes. I was
Okay,
gonna go into.
so I want to touch base on that because I got a group of founders together here in Atlanta for Juneteenth. We went to Marcus. Have to shout out that restaurant because we had a great time. So we're sitting in Marcus. It's maybe 10 of us, and this was the conversation we had. Everyone was talking about how they're struggling to raise, how some of them are burning through what they have left, and it's not looking good. And it was did you hear so-and-so wound down their company? Did you hear so-and-so? So it was a lot of frustration being expressed, but there was also so much just community and support being shared among them. And one thing that started happening as one founder who said, it's not looking good, I'm probably gonna have to shut down. Another founder who's doing well, who's seeing a lot of traction, said, well, I might need you to come work for me. So as you're going through this process, again, I keep saying community, it's a Goody Nation, theme and just a focal point of why we do this work. Make sure that you let people know where you are and then let them know what you need. So if you do think that you may be looking for a new opportunity and you know that they are looking for support in the area that you specialize in, drop that seed, figure out what it could potentially look like for you all to collaborate, because that is how I've seen founders find their next move to stay in the ecosystem, to stay in work that they love to do. Because what I don't want to see is people wind down and then disappear because, again, the guilt and the shame, they feel like they can no longer be in spaces like this because of the fact that they've had a failure.
Yeah, can I say something? Can I piggyback on that? Okay.
Well, no, I mean, I don't know if it's how it's. Let's go, Shantel, if you feel, and then we'll go Sherelle.
I'm so sorry. I think if you don't deal with the fact that you may have had a failure, then you're going to go into that next opportunity like, well, gosh, you know what? I could do this so much better. I don't even know why they're running this company. If you don't deal with it, you kind of drag it into the other experiences. And I always say, like, co-founders or people that it's almost like being in a boy band. Lots of fights. I mean, you guys would not believe the things that I see in terms of people not getting along. It's like a marriage. So I totally agree with what you're saying is community is so important. You want healthy people coming to the table, and they have to deal and I'm going to curse, they have to deal with their shit before they are ready to be a part of another team.
Yeah, Drew.
Yeah, so just quickly, I was tired. So I wasn't looking to jump into doing anything just yet. I think it was less shame, less fear for me. For me, it was just like, what is my next thing? Because that's what people would ask me. What's your next thing? And I'm like, I don't even know. And because you want to say something brilliant and profound, right? And you're like, I'm gonna be at home, and I'm gonna put some jazz on, and I'm gonna call my mama, and like
Self-care.
Be a regular
we'll
person.
connect with my family, because my family got to the point where, like, there was a point, it made me so sad. It was like my younger cousin, who I like babysat like in high school, who felt like he couldn't text me or call me because he's like, well, I know you're busy. Yeah. And I realized, like, I want to spend these next few months in recovery. Like, I turned off my phone, I turned off the comments on my like Instagram, everything. I was like, I appreciate everybody showing me love, but like, I need this time to myself to get back to who I am and to get back and pour into my family. But the thing I will say is that as you are building, your company is just an extension of who you are. So continue to show the world everything that you're about. And I say that in terms of, everyone talks about building your personal brand. Your personal brand will make you money. The amount of money I've been able to make just from speaking engagements, consulting, or what have you, on top of being able to run a company and pay myself through it, when you're doing your work in public, when you have that thought leadership that also is an extension of the work that you're doing. So like I got a book deal, so I wrote a book on the future of work called Upper Hand, Future of Work for the Rest of Us. Y'all are not pulling out your phones to get it on Amazon, but that's cool. But think about how doing your work in public attracts opportunities. I would get more phone calls for awesome jobs as an entrepreneur because people could see my work. In the spaces I was in, I made sure that I built amazing relationships. And these weren't opportunities that I was asking for. They're like, hey, I met you at such and such. Would you be interested in this particular kind of role? And that's when you have to decide, am I really about this entrepreneurship life? Because them stock options and that salary look real good.
Right.
And even after, the first phone calls and emails I received after we made the announcement about the Plugs transition, it was like people tossing me opportunity. And I had to decide, like, I don't really want to do that. And being clear on, like, even being clear on what you're even not clear about, on the things that, like, you know you don't want to do for sure. But you set yourself up with whatever the next thing could be based on what you've accomplished. Because people have seen you move, they've seen you work, they see the value that you add. And so sometimes, even if you do decide to wind down or sell or what have you, you want to have that optionality just based off of who you were being while you were also building your business.
Yeah. Yeah. I mean, that's awesome. That's awesome. I mean, there are so many just dope people, right? So many talented people that have come into the startup space, not only over like the last few years, but the last, 5 to 8 to 10 years. As a startup community overall, we cannot lose, their talent. We have to help them to understand they should stay in the game. I think this is a national issue. Like when it comes to economic development, we cannot lose talented people of color, particularly founders of color. And what Sherelle helped me to realize is their employees as well, their team members. We got to keep them in the game. We got to keep them in the game. And Sherelle, you mentioned some of her team members that went on to AJC and Techstars. Barry, alluded to after his startup, he went to Techstars and now is an investor.
And my co-founder is now the senior technical advisor to the mayor.
There it is. Senior tech. Snap it up for that. Clap it up for that. So again, just because it may not necessarily work out, you got to sell or merge, there's still value. And more importantly, as a country, as a complete country, we cannot lose talented people, right? We just cannot afford them. And so with Goody Nation, we're launching this project called Stay in the Game to help talented founders of color and now their team members, like literally I made this up, that's right. And now their team members to get connected to other jobs within the innovation space. It could be a big tech co, it could be at a bank, it could be at a city, it could be at an accelerator or the like, but we gotta keep these folks in the game, right? And so even doubling back to some of the previous conversations, on a local level is where this stuff happens. And more importantly, we have to be intentional around making connections so that some of these dope people understand when a job is about to open up, is already open, is about to close and stuff like that, right? So as we close, not enough time for Q&A because we got to wrap up, but we got time to talk to these dope folks after. Let's kind of do some quick contact. So how can people get in contact with you, Chris?
Probably the easiest is to connect with me on LinkedIn, Christopher Gilmore, my full name for my mom, on LinkedIn, and I'll respond there.
And I'm on social as Barry Givens Jr., and then email is barry@collab.capital.
There it is.
So for me, LinkedIn is Jaisa, Jaisa Gooden, Gooden. And when you send the request, put in the comment or the note that you heard me speak here, so I know you're not a bot, because I've had some crazy situations. So that would be appreciated. And then also, after we speak, I plan to go to the meeting room next door and have some conversation, so you can come by there and catch me as well.
I was not prepared, I'm sorry. Sherelle Dorsey on LinkedIn, definitely the best way to connect.
Shantel Cohen on LinkedIn, and also just tell me that you met me here or you saw me, and I'll be happy to respond.
There it is. We'll give it up for these dope people. And you all can take that. We're gonna do a quick photo for a close on out.